Hey guys and girls, welcome to this week's episode of the B.Invested with Birchy podcast. I'm your host, Nathan Birch, and it's the show unraveling the truth to the facade of the 21st century. We're now exiting the matrix and waking up to motherfucking reality. Today, I talk about quite often foundation portfolio. Let's get to 10 properties, 10 little shitters, 200, 250, 300 grand a piece. Let's build out a portfolio. But I was thinking about it, and quite often I speak about these things, but I'm talking from an elementary level, right? And I was thinking, because I was just having a map session with a client, and I was talking about the bigger picture. And I was like, once we get to here, this is what we're going to do. So I thought I'd share with you, what comes after the foundation portfolio is built. So you get to 10 properties, and then what, right? So I guess with every investor that I've worked with over the last 16 years, there's always a choose your own adventure. And every one of my investors is different. So their goals are different, their lifestyle's different, their starting position's different, their end goal's different. Some might come with a principal place, some may want a principal place of residence, some may come single, some may have family. Everyone's different. So it's really a choose your own adventure. And what does that look like for you? But once you get to the 10 properties, let's skip forward, right? For those of you that are tuning in for the first time, let's say we go and build a portfolio of 10 properties at 200 grand a piece. They go from 200 grand to 400 grand. You've got a couple of mil worth of equity. You've got cash flow that's neutral to positive cash flow. What can you do? What's the whole purpose of? What's the whole point of it? Well, you've got this portfolio. You can just live off the rent. You've got your 100 grand a year income coming through. Happy days. Or you can take it off to the next level, right? And what does that look like? So the first option could be that you want to buy yourself a principal place of residence. Let's call it that. Let's say the principal place of residence is going to cost you $1.5 million. $1.5 million, you're going to need $300,000 as a deposit plus closing costs. Let's call it $350K for the fun of it. If you have to save $350K, how long is that going to take you to save $350K? What does it look like? If you've got 10 properties now and those things go up by 50 grand each, well, then you got 500 grand worth of equity there. Now you can take that 500 grand worth of equity, and that becomes a deposit for your nice dream home that you're going to have for your family. So you don't have to physically go work. Your portfolio is working for you instead of you having to work. Because most people, when they rock up, they've got two options, right? They've got themselves to go and earn money, or they've got their spouse to go and earn money. But for me, I've always thought about it. I've got myself to earn money. I've always been, I was born in the world. I look after myself, right? That sort of thing I look at. But then it's like, anything you bring into your life, you can't rely specifically for that. So you want to have control of yourself. If you're a single person, this is, right? But if you're a couple, you're doing it together and you're starting out today, then, what do you have? So you either got yourself with a job, or you've got yourself and you've got a spouse that has a job. When I look at it, I'm thinking, okay, I've got myself, I've got assets, I've got other assets, I've got hundreds of properties here. When I rock up to a problem or a situation, I've got multiple options there and multiple choices of how I can tackle that situation. So when it comes to buying a dream home, if you've got the foundation portfolio laid, well, then you've got equity there. You could either sell off a property and release that cash, or you can just go pull out the equity and use that. So we're starting to go down different directions here, right? Do we sell the property? Do we keep the property? That's a decision for yourself, right? But once you sell a property, then you've lost it forever. No more capital growth, no more cash flow, no more future gains on the cash flow. It's the end of the road. But let's assume you've gone, okay, I'm going to buy a property for $1.5 million. And I'm going to take out 300 grand equity and a 1.2 loan. That's going to cost me to hold, say, 75, 80, 90 grand a year worth of income. So where do you get 90 grand a year income to pay for your principal place? Well, you can go get a job and work hard. You could be paying rent and you're paying a mortgage now, whatever the case may be. But if you've got 10 properties and you push the rent up $100 a week, that doesn't have to go up today. It could go up $100 over the next 5 years, $20 a year, right? You manage your portfolio correctly. You treat it well, you give it a lot of love, and it'll give you dividends on the back end, right? So if you've got 10 properties that are giving you $100 positive cash flow, there's $100 times 10 is your $1,000 a week. That $1,000 a week worth of cash flow coming through, you can then redivert over to paying for the mortgage on your principal place of residence. So instead of you having to go work for your place, now you've got all these tenants going to work to pay you the rent, pay your mortgage on your investments, and to pay for your dream house. Happy days, right? The more tenants you have, the bigger the nice house you can have, right? Because ultimately, at the end of the day, it doesn't matter if you're on 100 grand a year, 200 grand a year, 500 grand a year, right? You'll be capped out on what you can borrow. It's inevitable, right? I've seen people on 30 grand a year or 40 grand a year household income, which are in a better position than someone on 200 grand, right? It doesn't really matter, right? It can go very easy. But the thing is what can those assets do for you? And by investors, when they finish their journey, their rents that are coming through, they've got debt and they've got assets and whatnot, but their rents are generally, 3-4 times the size of what their income is that they've been working with us on. So that's one aspect. It could just be, okay, my goal is to retire the spouse, right? A humble goal of doing that. It could be retiring yourself. Everybody's household dynamic is different. It could be that you want to be a developer, right? I've seen so many tradies, so many builders that I can't get started in building. And most of the time they'll go and get these mezzanine finance and get in really ugly positions. And that's why a lot of builders, give up or get stuck at early points because they don't have as many options and choices to throw at things. They get caught up in the emotion of, I want to be a builder. I want to go buy a property. I want to build it. I want to sell it. But what happens if you're a builder and you're buying, you're building and you're selling, you're always an active person, right? You're making cash flow from buying and building and selling. You're selling your skill, no different than a job, right? So I see so many builders that are like, shit, I wish I could go back and I would have kept 90% of the stock that I built or the 90% of the things that I held on because it would have been a better end result. So how I see the foundation portfolio helping a lot of these tradies is that they need the capital to start doing builds. And the foundation portfolio has led, I know lots of really great builders out there, some that aren't so good as well, but I know lots of builders that have started their journey with B.Invested and have been able to build very big building empires based on the fundamentals and the foundations of having the assets, the equity, and the growth in their portfolio that's enabled them to grow their business. So there's another angle, right? You could do that. It could be a matter of, okay, how do I pay down the debt on my portfolio? If you've got, $2 million worth of property and it goes to $4 million, you've got $2 million worth of equity there. You could go, okay, I'll pull out $1 million worth of equity and become a flipper and then flip the properties. I wouldn't be flipping the property when I first start because you're being an active investor once again, and you're having to work. But at the end of the year, you make a little bit of money, but you don't have any assets. You have to go buy your new property, which inflation is doing you a disservice. So build the foundation portfolio. All roads lead back to building that foundation portfolio first, right? A lot of people say, let's get a commercial property, right? I've got lots of commercial properties in my portfolio. I buy commercial properties for investors as well. I just don't talk about it that often. Reality is that commercial properties bring a larger element of risk, a very large element of risk, because if they sit vacant or the yield is based off the value of the rental, right? The value of the property is based off the yield. So if you have a property that's vacant, you go, the tenants will pay the outgoings and whatnot. But what about if it's vacant for the next 3 years, right? I bought one of my favorite properties that I bought as a waterfront property on 600 square meter block of land. I paid $465. It's probably worth 2.5-3 mil on the water in Sydney, sort of thing. And that thing there, it was an old Video Easy store, and it was vacant for 11 years. Imagine a poor bastard that owned it before me, vacant for 11 years. And I had it vacant for 2 years, and then I rented it out for 20 years on a lease. And it's good, but sometimes I'm like, it's like with the ASX listed company, 200, like top ASX listed company now. So the value's been added in there. But, when you go to buy something like that, the bank sees the risk in that deal. So they're going to want to see a 30% deposit or 40% deposit in the deal when you're buying a commercial property. You're going to, let's say it's $1 million property you're buying, you're going to have 400 grand sitting in your pocket, right? But if you've got the residential, you've got the equity there now that you can tap into that equity and use that and pull it out to use as deposits for the commercial properties. It could be that you go, okay, I want to buy a block of units. And the same thing would apply for a block of units, right? I share with you guys on Instagram and Facebook and on my socials. I want to go, hey, hot deal, I've got this thing, right? Whatever. And people are like, I want to buy a block of units, right? But how do you pay for a $1.5 million block of units? Do you buy it cash? Do you have $1.5 million? Do you have a bank that's going to lend to you? I've got a really cool deal at the moment, right? And by the time you watch this video, it'll be gone. But this deal is $650,000 and it's a block of 8 villas, right? So it's like $87,000 a piece, right? No bank will lend in this location. They just won't lend on it, right? They'll lend in the location, but the policy won't allow for them to lend. And even some of the weirdest and obscure banks won't lend on this thing, right? So that thing you have to pay $650,000 cash. The banks change their policies from time to time, and it'll open back up again. But, that's a bargain. But how do you afford to pay for that if you don't have the $650,000 cash? If you have to go and buy $1 million property, $1.5 million, and put down a 30 or 40% deposit, where's $300,000, $400,000, $500,000, $600,000 going to come from anyway? But if you've got the equity in your foundation portfolio, you can pull out that equity and then go buy these more chunkier assets. So generally speaking, when my clients get to 10, 12, 15 properties, that's when we start throwing blocks of units, commercials, and other sort of assets into the mix, depending on what their end goal is, depending on what their risk appetite is, and depending on what they really need is. And what's going to ultimately be the best vehicle to get them to that end position. So whether you're wanting to be a developer, whether you're wanting to buy your dream home, there's so many people I see, right? I see it on all, I saw an article that went out the other day on me, which is a pretty cool article, by the way. And it's like, I'm upset because I'm not a billionaire by 40. That was the heading, right? Something like that. And all these people are like, oh, this is disgusting. These guys are part of the problem. And all these people are like, I can't afford a property. I wish I could get a property. Give me a property, whatever, right? But I realize from when I'm plugged into the internet and what I'm seeing out there in the world is that a lot of people are struggling to buy their first house at $1 million or whatever, right? There was an article today that came out. $1 million is the average house price across Australia now, just to get in any capital city. And, how do you go and afford a house for $1 million, right? It's very expensive. So the best way is to build a foundation portfolio and make your tenants pay for you to live where you want to be, right? And it's not rent vesting forever, right? A lot of people talk about and spruik rent vesting. Maybe at an early point to go to rent vest, but ultimately everyone should own their own home as well. So, use your portfolio to get you into that dream home. Most people are trying to get into the dream home and then being chained to a mortgage and being a debt slave for the next 30 years of their life. So, foundation portfolio, it may not be sexy, it may not be flash. The properties that I talk about, shitbox for $200,000, shitbox for $250,000, whatever, they're not the sexiest things in the world, but the numbers are very fundamental. And I don't know how many thousands of videos I need to film for you guys to watch on my socials of properties that have bought for $150,000, $200,000, $300,000 that are now $600,000, $700,000, $800,000 in value, right? Different times, different markets, different places. We can't go back in the DeLorean and end up in 2020 or 2015 or 2010 or wherever. But there is still the opportunities that are out there in 2025 to be able to build that foundation portfolio up. And once you've got the foundation, it all becomes a game on top, right? The foundation gets you set. I've always thought if the average income, whatever that was back in the day, it was $50,000. Nowadays it's $150,000. It's probably pushing on to $150,000 in the near future. Whatever the average income is, you need to replace that and index it with inflation. And the foundation portfolio just continues to go up with inflation, which is very crucial because inflation's here in all our lives because of the monetary system we've got. But the foundation portfolio sets you up. Once you've removed yourself with the need to go and work and remove yourself from the need to have an income coming through and you've got it coming via passive, the whole paradigm changes. So maybe I'm crazy when I say things, maybe I'm wild with some of the shit that I say, but I just don't care. I have fun with what I do and I enjoy you guys in the community. That's why I say it. So get yourself to that position. Once you get to that position, then it's choose your own adventure, right? Do I want to be a developer? Do I want to buy the house to live in? Do I want to retire? Do I want to buy blocks of units? Do I want to be commercial? That is the gateway to be able to get yourself in there. I see so many people that try these other things that I've just discussed, whether it be busting their balls on getting a principal place of residence and can't afford to pay the mortgage, whether it is buying a commercial property thinking they're awesome and then they have no tenant there, then it's vacant for the next 5 years or 3 years or 2 years or even 6 months. Imagine if one of your properties is vacant for 6 months, how painful that'll be, right? So when it comes to the commercial properties, it has risk attached to it, whether it be the block of units, whether it be the retirement. There's risk that's attached to all of these things. You can minimize it by having good foundation set up. So if you need help on building the foundation portfolio, you don't know where to start, you could be looking and going, oh, I want to buy this, but I think I should be doing this, and this is against what everyone's telling me, and how does it fit in, and all that. It all starts with the conversation. So reach out to us. There's probably a link somewhere on the screen. If not, send us an email or a call, 1300 367 925, admin@B.Invested.com.au, and ask questions below, and I'll make more videos of this content if that's what you like. So thanks a lot for watching. Have a great day. Remember to subscribe. And see us every Thursday, Google Play, Apple Play, Spotify, and YouTube. Bye for now.
Like Bilal said, man, we're stuck in the matrix. This my advice, don't care if you take it.